Hey investors, welcome to AI Crypto Insights, your few minutes of AI-powered market analysis. Remember, this is all for educational purposes, not investment advice. All right, today we're tearing into a piece from Cointelegraph by Marcel Pechman, and it's asking the big one. Are these macro fears going to put a lid on Bitcoin's latest run?
So, Bitcoin just smashed through a key resistance level, hitting a 3-week high. And of course, the million-dollar question, well, the $90,000 question, is right here. Is the bear market finally over? I mean, the price looks great on the surface, but the story underneath? Oh, it's a whole lot messier. Let's get into it.
All right, first up, warning signs from Wall Street. Before we even touch the crypto data, we've got to zoom out. Look at the big picture. And right now, the wider economy is flashing some pretty serious warning lights that seem to be holding Bitcoin back.
Okay, check this out. The S&P 500 is just 1.3% shy of its all-time high. So you'd think everyone's celebrating, right? Well, not so fast. There's this growing worry, this anxiety bubbling up about where the economy is really headed. And this disconnect, this tension between what the prices are saying and what people are feeling, that's the stage for everything happening in crypto right now.
And this slide, it just lays that conflict out perfectly. You've got this wild optimism in one corner, especially around AI. Look at Baidu, shares popping 15% on an IPO filing. But in the other corner, you have the cold, hard dose of reality. Tesla's deliveries are down 15%. The job market's looking a bit shaky. It's like the market has a split personality right now.
So that brings us to the crypto data dive. How is all this nervousness on Wall Street showing up in our world? Well, this is where it gets really interesting, because even though the price has been going up, the data underneath is telling a completely different tale. Let's dig in. $900 million. Let that sink in for a second. That's how much money has left the U.S. spot Bitcoin ETFs in net outflows since December 15th. So think about that. The price is going up, but the big ETF money, it's heading for the exits. That's a huge red flag.
And this table just hammers that point home. It's a classic flight to safety. You can see it right there. Money is pouring out of Bitcoin ETFs. And where's it going? Straight into gold ETFs, which have seen inflows for 7 weeks straight. That tells you investors are getting defensive. They're bracing for a slowdown, not getting ready for another massive bull run.
Okay, next number, 4%. What's that? It's the annualized premium on Bitcoin futures. Now, I won't get lost in the weeds here, but you just need to know one thing. In a healthy bullish market, that number should be higher, a lot higher. A premium this low tells us one thing loud and clear. The pros are not interested in making big, leveraged bets that the price is going to keep climbing.
So what are the pros doing instead? Well, they're paying more to protect themselves against a price drop. Think about that. While the price is going up on your screen, the so-called smart money isn't buying into the hype. No, they're actually spending money to hedge their bets, preparing for a potential fall. That's not exactly a vote of confidence, is it? And don't just take my word for it. Here's a quote directly from Marcel Pechman's piece in Cointelegraph. He says, Bitcoin put-sell options traded at a premium, as professional traders demanded higher compensation for downside price exposure. Basically, traders are so worried about a drop that they're willing to pay extra for insurance. That says a lot about the skepticism at this $90,000 level.
So let's just recap these signs of investor caution, because there are 3 big ones. 1, the pros aren't using leverage to bet on prices going up. 2, huge amounts of money are flowing out of the spot ETFs. And 3, traders are paying a premium for protection against a drop. You put it all together and it's clear. The underlying data just doesn't line up with the happy price chart.
So let's bring it all home for our final verdict. We've looked at the shaky macroeconomy, we've dug into the crypto derivatives market. What's the bottom line here? What's the final takeaway on this rally? Here it is, our AI analyst verdict. While Bitcoin's price shows surface-level strength, underlying ETF and derivatives data reveals significant investor caution, suggesting the rebound is fragile and capped by macroeconomic fears. But hey, what do you think? Is this a bull trap or the real beginning of the next leg up? Drop your thoughts in the comments below. See you next episode.